life fund at the end, net liabilities of the TR, whatever the difference comes, that is the surplus. Add interim bonus minus dividend, there is no dividend, minus profit carried forward. How much available? 1,49,000. First we calculated as per the valuation balance sheet, surplus. Out of interim bonus should be added, profit carry forward should be deducted. Hello my dear students, I am Dr. B.S. Subramanya. Call my name Dr. B.S.S. Professor in Commerce and Management, Vidhyaashram, First Aid College, a Temple of Excellence, MYSURU. In this session, I am going to have Advanced Corporate Accounting 4th Semester, Unit 2, Session 3 in favor of Final Accounts of Insurance Company. Now, here, today, we are going to discuss about the valuation balance sheet. Valuation balance sheet. So here the format is, what is the life fund at the end? So accumulation of whatever the premium made that will go to insurance, it become a fund, life fund at the end. What is the net liability at the end of the year? Whatever the difference comes, that is a surplus. I will repeat, life fund at the end, net liabilities of the TR, whatever the difference comes, that is the surplus. Now, move on to step number 2. Calculation of true surplus. Whatever the surplus available from the balance sheet you have to take, add interim bonus which is already paid, minus dividend paid, minus profit carried forward should be deducted. Whatever the difference comes, that is the true surplus. What is the true surplus? Surplus, add interim bonus, minus dividend paid, minus profit carried forward for the next year. Whatever the difference comes, that is the true surplus. This is step number 2. Step number 3, distribution of true surplus. 95% goes to policyholder of the true surplus, 5% goes to shareholder. What is how much is? 95% goes to policyholder, 5% goes to shareholder. Now, how much already got? 95% bonus to policyholder. How much already interim bonus paid? So this is the final bonus. 95% we calculated. How much already interim bonus paid? Now, the balance is called final bonus to policyholder. This is a method. We'll start the problem now. Here. Life fund at the end, 42,40,000. Net liability, 40,90,000. Interim bonus, 30,000. Profit carried forward, 31,000. Calculate the final bonus policy tour. So what is left over? There is no dividend is given. So we'll move on. Valuation balance sheet. Life fund at the end, what is the life fund at the end? 42,40,000. 42,40,000. Net liability. What is the net liability as per the problem? 40,90,000. Bring out the difference. 42,40,000. 42,40,000. Deduct 42,40,000 followed by 30 minus 40, 90, 1,50,000. 0, 9 plus 5. This is your surplus. Now, calculation of true surplus. particulars, rupees, surplus as per balance sheet, surplus as per 1,50,000. Add interim bonus. What is your interim bonus? Interim bonus is 30,000. It becomes 1,80,000 minus dividend, nil, minus profit carried forward, profit carried forward, profit carried forward 31,000. So 1,80,000, 180, follow this, 1,80,000 minus 31,000, 1,49,000. True surplus. So first we have to calculate the surplus. For a surplus, interim bonus should be added. Dividend should be there. There is no dividend. Profit carry forward 31. How much available true surplus? 1,49,000. Next, distribution of true surplus. Distribution of true surplus. Particulars, rupees. What is your true surplus? 1,49,000. 95% goes to policy holder. What's the amount available? 1,49,000. 1,49,000 into 95% by 100 into 95 divided by 100. 1,41,550. Then 5% goes to shareholders. 1,49,000 into 5 by 100. 1,49,000 into 5 divided by 100. 7,450. Add 1,49,000. Final bonus to policy holders. This is the last step. Final bonus to policy holder. Particular rupees. So 95% of true surplus that goes to 1,41,550 is payable. Already paid minus interim bonus, which is already paid, minus interim bonus. How much already paid? 30,000. Zero, 5,5,1,1. 1,11,550. Final bonus. to policy holder. So hope step by step you followed. What the first step? Valuation of balance sheet. Find out the true surplus. This is step number 1. Step 1. Step number 2. Surplus, add interim bonus, minus dividend, there is no dividend, minus profit carried forward. How much available? 1,49,000. Come back. This is step number 3. 3. Distribution of true surplus. 95% goes to policy holder, 5% goes to shareholder. Sharing 1,49,000. This is the last step 4. Final bonus. 95% of true surplus minus interim bonus already paid. Final bonus to policy holder. These are all the steps to be followed. So what is the first one? Valuation of balance sheet. Find out the surplus. Interim bonus should be added. Dividend should be deducted. Profit carried forward should be deducted. That is a final bonus available. True surplus available. Out of the true surplus, step number 3, 95% goes to policy holder, 5% goes to shareholder. Out of 95%, already interim bonus paid, that should be deducted. That is a final bonus payable to policy holders. Second problem, life fund at the end, net liability, interim bonus, profit carried forward, prepare the valuation balance sheet. Steps 1. Valuation balance sheet. Life fund at the end, life fund at the end, 83 lakh 84,000. 83 lakh 84,000. So net liability is 8 lakh. Net liability is 8 lakh. Deduct. This is 83 lakh 84,000 minus 8 lakh. How much available? 75 lakh 84,000. Surplus. This is 83 lakh 84,000. Then steps 2. Calculation of true surplus. Calculation of true surplus. Particulars. Rupees. Surplus. How much? 75 lakh 84,000 plus interim bonus. What's your interim bonus now? 80,000. Add 304 76 lakh 64,000. There is no dividend minus profit carried forward. minus profit carry forward 64,000. Deduct 76 lakh. True surplus. So first we calculated as per the valuation balance sheet surplus. Out of interior bonus should be added, profit carry forward should be deducted. Distribution of step number 3. Distribution of true surplus. Particulars rupees. 95% of true surplus goes to policy holder. What's amount? 76 lakh. $76 to 3 into 95 divided by 100. 72 lakh 20,000. 5% goes to shareholders out of 76 lakh 60 minus 76 lakh into 5 by 100. 76,000 into 5 divided by 100. Add 76 lakh. 3,80,000. Then final bonus to policy holder. Particulars rupees. 95% of 76 lakh goes to 72 lakh 20,000 is payable minus interim bonus. What's your interim bonus? 80,000. So deduct 0.0004. 71 lakh 40,000. Final bonus to policy holder. We have started 95%. 3,80,000 goes to 76. Out of 72, how much interior bonus paid? 80. What's the final balance payable to policy holder is 71 lakh 40,000. Hope you understand. We'll go to last problem now. Third one. Life fund at the end 64 lakh 54,000. Net liability 45 lakh. Interior bonus 1 lakh 80,000 on paid up capital of 36 lakh. So dividend paid at 10% and paid up capital of 36 lakh. 36 lakh into 10 by 100. Profit carried forward 10,000. What's the first step to do? Valuation balance sheet. life fund at the end, life fund at the end, 64 lakh 54,000, 64 lakh 54,000. Net liability, net liability 45 lakh. Deduct 64 lakh 54,000 . 64 lakh 54,000 minus 45, 19 lakh 54,000. 4, 5, this is your surplus. Steps 1. Now, steps 2. Calculation of true surplus. Calculation of true surplus. Particulars. Calculation of true surplus. Particular rupees. Surplus as per balance sheet. Surplus as per balance sheet 19 lakh 54,000. This is your surplus. 19 lakh 54,000. Add interim bonus. What is your interim bonus? 1,80,000. Add 21 lakh 34,000 minus dividend. How much percentage? On 36 lakh, 10%. 3 lakh 60,000 minus 21 lakh 34,000 minus 3 lakh 60, 17 lakh 74,000, 17 lakh 74,000 minus profit carried forward, minus profit carried forward 10,000. So 17 lakh 64,000. This is true surplus. $17 lakh 64,000. Now, steps number 3. The distribution of true surplus. Particulars rupees. How much? 17 lakh 64,000. 95% of 17 lakh 64,000. 17 lakh 64 into 95 divided by 100, 16 lakh 75,800. 5%, 95% goes to policy holder. 5% goes to shareholders. This is 17 lakh 64,000. 95% goes to policy holder. 5% goes to shareholder. 17 lakh 64 into 5 divided by 100. 88,200. 88,200. Add this is 17 lakh 64,000. Last step, step number 4. Final bonus to policy holder. Particulars rupees. Final bonus to policy holder. So 95% of true surplus. 95% of true surplus, 16 lakh 75,800 minus interim bonus How much already paid? 1,80,000. So 16 lakh 75,800 minus 180, 14 lakh 95,800. Final bonus to policy holders. First, valuation of balance sheet. Find out the true surplus. For a surplus, interim bonus should be added. Dividend should be deducted. Then, profit carried forward should be deducted. Then, then we'll get the true surplus. From true surplus, 95% goes to policy holder, 5% goes to shareholder. Out of 95%, interim bonus is already paid. That should be deducted. Balance goes to final bonus to policy holder. I have solved about the 3 problems about the valuation balance sheet. Valuation balance sheet, I have solved 3 problems. All the type I have solved. So this will come for 10 marks. We'll meet in the next session with another problems. So it may go to holding company. So we'll meet in the next session.